Traders, in this video I'm going to be sharing you my live trading session. We're looking at S&P 500, time frame is 2000 tick chart, and the structure is bullish uptrend. It's not a strong one, but it is a decent uptrend working higher. Why? Because price is creating series of higher lows and higher highs, and price is consistently slowly but surely pushing higher. Now you guys can see price is bouncing and turning up from these areas, and as a price action trader who is relying on the naked candles on the chart, I need to find the proper place and proper key entry point where price is bouncing from, and this is the trend line that is nicely confirming all of these touches. So you guys can see prices are really fitting nicely inside of this channel. At this point on, we may have a potential bounce in the future off of this key entry point, and right now my job is to wait for price to pull back and enter on a high probability setup at the key entry point, either at this blue 21 bar exponential moving average or at this trend line. And also I'm paying attention to these downtrends because major structure is bullish, but there are downtrends working lower, and I need to wait for price to create a break of a downtrend and preferably new extreme. That's how I know that I'm safe to be looking for longs after downtrend plays out with the break and new low. That's according to trendline rule. Prices right now pull back to the 21 bar exponential moving average in the form of a two-legged pullback, but if this entry triggers, I'm not going to be taking the second entry long. Why? Because we just came off the highs of this channel, of the upper part, and you guys can see price is swinging up and down, up and down, up and down. So once you're coming off the upper half, I expect for prices to show a little bit deeper pullback. Also, we had quite a big bearish bar, and this is such a tiny bullish bar. This really feels like a mediocre pullback, and I expect for price to create additional move down. For that reason, I'm skipping the second entry long. It just feels a little bit too extended. You want to buy once the prices pull back deeper, not at the high of the move like this. And you guys can see we may end up trapping everybody going long with this two-legged pullback. Also, the short-term downtrend is in play. You guys can see this is why you cannot take every second entry, and there it goes. But since the structure is bullish, I'm waiting, and I'm not going to be taking short just yet. Stock market open. Bullish bias is still in this market present. We form a double bottom, pushing above EMA. So I'm expecting to get a potentially failed second entry, short entry above exponential moving average as a high probability setup. Right, traders, I'm preparing my limit order, and we missed the entry. So that was really quick, but the entry was a failed breakout below this trading range, and most breakouts according to price action rules will fail. So when prices broke below the trading range, I'm fading the breakout with the direction of the overall bias. Also, it confirmed the key entry point. Now this is fifth confirmation of the trend line, and you guys can see this is where the high probability setup will appear. It just formed too quickly. I didn't manage to act in time, but this is the basis of price action trading. You determine where the key entry point is, and you follow the price action rules. You wait this congestion out, and once price breaks below the congestion, you fade it. So you're following the trend range rule. It is a high probability setup rule, and also it is off the trend line. You guys can see fifth confirmation of the channel. You're with the direction of a trend. Perfect example of how you can determine where the key entry point is going to be and how you can take a high probability setup. It is a bummer that I missed this free setup, but sometimes you're just not quick enough. The market keeps pushing higher. At this point on, I'm still focusing on high probability setups at the exponential moving average. We just had new high, first entry long, second entry long, but second entry long triggered above bearish bar below exponential moving average. So I cannot enter there. And then price was already way too bullish above EMA, and your stop loss has to go below this bearish bar. So the stop loss is really big. I looked at 2500 tick chart a little bit later. You guys can see this was the gorgeous two-legged pullback with a nice signal bar. So if you're watching 2500 tick chart at the same time, you guys can see two-legged pullback at the key entry point, quick easy scalp with the direction of a trend. But 2000 tick chart unfortunately didn't have a good second entry long here, which is a shame because trend is up, two-legged pullback, and it's a high probability setup. You're not overcomplicating anything here. All right, guys, I'm quickly resuming the video as I'm going to take a failed second entry short. New low, first entry short pullback, second entry short with the direction of a trend. I played it a little bit greedy at the start. There is a little resistance, but you guys can see a lot of traders got trapped on a second entry short, and the scalp was made, so I have to cancel my order. A lot of traders got trapped on the second entry short in a strong bullish structure. So this is a failed second entry short, high probability setup, and this is close to these highs, yes, but this is such a great signal bar. It probably lured a lot of top pickers just to get a quick easy scalp. All right, we just had a break of the major uptrend, and this downtrend had to break at a new extreme. So at this point on, prices are below exponential moving average. So I cannot go long just yet. I need to see confirmation of bullish momentum, and I want to see price to push above exponential moving average. There's a possibility of drawing a wider channel, something like this, which is looking very tempting, especially when it's running together with the exponential moving average. But since the overall structure was this bullish and this is the major trend, I'm still looking for price to push above EMA and give me a failed second entry short, because it's the first break of the major uptrend. So I expect to get new extreme, downtrend had a break, move to a new low, and if we push above EMA, I'm going to be looking for longs. But you guys can see it may take a little bit while because this uptrend was quite strong, so the correction may take a little bit longer. We can see that the market is not really reacting as I initially expected, because instead of price pushing above exponential moving average and reaching the new extreme, we keep strongly pushing to the downside. For that reason, I extended the downtrend because this is right now the structure that I need to respect. And just because I expect new high according to trendline rule doesn't mean that if price is showing me opposite, I'm still going to be leaning towards price creating new high. I need to adapt to the current structure. I need to trade the structure I get, not the structure I want. And right now this downtrend is in play. We have an overshoot. Alright guys, I'm quickly resuming the video as I have entered a failed second entry short, but it looks like price may reverse on me very quickly here and I might get instantly trapped on the wrong side of the market. Basically, downtrend played out with the break and 2 legs to a new extreme. We had a second entry short that closed above exponential moving average. And right now the trend line is holding, EMA is holding price, and this was fairly strong bar. It's not fully bullish, but the bottom tail is very bullish, indicating that a lot of people started buying at the end of the bar. Looks like I might get stopped out here. I'm gonna go for 8 ticks. It ticked higher instead of reverse down, but I have a break, 2 legs to a new extreme. I cannot really justify going short, especially when second entry short form above exponential moving average. But we're most likely going to get stopped out here. This is my first trade for the day. Can you do? Part of trading. Today is FOMC day, so the market is very slow. I wanted to take at least one trade before the FOMC announcement. Also, if you guys notice, this major uptrend still needs to get new extreme. So I'm still expecting for price to create new high for this uptrend. It's giving me a chance to get out of the break even. But now that we have such a strong bullish bar, I think we can get some momentum. If we trigger above this bar right here, first entry short, second entry short failure. 2 key entry points are holding price. Come on, just a couple more ticks. And we got filled. Alright, so our runner was instantly stopped. I liked break, 2 legs to a new extreme, strong push above EMA confirming the bullish momentum, and uptrend needed new high, but at this point on we pushed so far down, we retraced so far down that we may not even get the new extreme. Mainly I like the fact that price created the break, multiple legs to a new extreme, and the trend line kept holding price. And if you take a look at the signal bar, it was looking very bearish, and at the end of the bar it strongly reversed up. We even had a high-low confirmation setup of the failed second entry short. But you guys can see this is why I cannot move my stop loss. I enter a trade, I've done my analysis prior, and the trade is either going to work or not, and I cannot change my decision. I made my decision before I entered the trade, and after I place my order, anything can happen, and right now I'm just waiting if traders who have the same intentions will come into the market or not. You guys can see we came 1 tick away from being stopped out. This is why we put the stop loss 1 tick below the signal bar, and you would have survived if you held. It was a really sweaty trade, but it just goes to show you that there's nothing I can do once I enter. If I enter a trade and I start to feel those emotions, I start to be greedy, I start to be afraid, that's not a good look. If you're struggling with these emotions, you need to step away. Don't look at the trade, just let it run. I'm going to take a second entry long, and we got filled. I'm going to go 8. I'm going to go only for 6 ticks because the market is slowing down and we are right at these highs. So I'm looking at 2-legged pullback. We trigger below this bar and form a pullback, so I think there's enough room for us to take a 6-tick second entry long for price to create new extreme. EMA keeps holding price, downtrend played out, and we got filled. Runner just got hit instantly again, but it's completely normal. I probably should have went for full because we just reached new high and this volatility is slowing down before FOMC. So this was our second trade for the day. Two-legged pullback, EMA keeps holding price, and new extreme was expected. Because this is the first break of this uptrend, so according to price action rules, I expect new high. Price created a break, new extreme was formed. We still need to get new high for this major uptrend. But with the break in new high, it is possible that we may not make it and price may turn down from here. That said, I'm going to wrap it up with my 2 trades because FOMC is going to be announced in less than 2 hours. And 1 hour before FOMC, you want to be out of the market. You don't want to be trading because market gets really slow. And generally there is a big consolidation and it is easy for high probability setup to fail because there's just not enough volume. So for that reason, I'm going to take my 2 trades. I had to sit here for a long time. I was hoping for price to create new high, but as you guys can see, price is failing to push above EMA. And since price is failing to push above EMA, I cannot enter here. Price eventually created double top, reverse down, and you guys saw me taking these trades. And there were a couple of decent longs on the way up. Major key entry point is holding price, fell break lower, and even this entry is looking very tempting. It is not second entry long because second entry long trigger here, but it is visually second entry long. First leg down, second leg down, triple bottom in a strong bullish structure. Very tempting high or low here. I'm gonna see you guys in the next one. Take care, everybody.